Aw.
I was like, alright. I was like, that's kind of weird, but alright. Now it's just normal.
That was just normal.
That was
Par
just
for the
normal.
course.
Yeah.
Hey everybody, welcome to Trading the Close. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Hope everyone has had a good day. Markets closed at 1 p.m. Obviously, crypto still open though, and it will be open on July 4th. So, a couple things to go over. Economic data today was a little bit weaker than expected, but markets didn't seem to care. Earlier in the game plan, we saw the markets rolling over a little bit, but the retail investors really the only one that's investing on a pre-holiday shortened session. The big traders on Wall Street, they've already left for the weekend. They're in the Hamptons at their yacht clubs and all that, so they're not even involved. And that gives you the bias to the upside for the markets, and that's what we saw today. But this is the kicker, guys. We still saw a divergence continuing. The Russell 2000 was flat on the day. The Mag 6, the Mag 7 were what was carrying the market up. Nvidia, Tesla, you name it. Those stocks pushed the markets up today while the rest of the group was left in the dust again. All right, into the action here. Let's take a look. We have the key stats for the day. Dow down 11 points. And by the way, that shows you about what was going on there with the Russell. Remember, the Dow's only 30 stocks. And so if it doesn't have all of these bigger players in it, it does have Apple in there, but that's about it there, then it means that that's going to underperform. NASDAQ up 159 points. Enough said right there. The biggest weighting. Literally, if you take those top 7 stocks, it makes up almost 50% or about 50% of the NASDAQ. There you go. That's what you have right there, up 159 points. S&P gained 30 points on the day. Oil bounced just a tiny bit after that rollover yesterday, up 57 cents, and gold was up $25 as the dollar fell on the economic data and yields also fell. Lastly, Bitcoin taking a beating, guys. We are now back below the key level of 60,000. Do we close here? If we do close here, what does it mean? I'm going to cover it in the charts. All right, speaking of charts, let's get right into it. Let's go to the intraday here on the S&P 500. Flipping over, guys, you can see that for the most part, it continued its trend from yesterday. So this is yesterday's data over here. This is today's data. And in fact, what's crazy about this is you could almost put a trend line right underneath here, and it kept it in a very controlled line. Now, what this is, by the way, is it's retail buyers and then algorithms just keeping everything in a tight range. These are computer programs, not the big investors, not the big institutions. They're just keeping order in the markets, letting the retail investor buy in, buy, taking it up. Now, you do see a trend line up here. I'll flip over to my daily chart to see where that trend line is coming from. And it looks like we're just about in there. Interestingly enough, look at that, folks. We're back to this key trend line on the S&P daily chart. There we go. Flip it over there. There, you can see it right here. So, again, just kissing the underbelly of this level. If you take this high from 2023, you connect it through the 2024 high before we had that correction. We touched it right here, and we're touching it again. So that tells us, again, going into Friday's action, remember, stock markets close tomorrow, that's going to be something to watch, and then we also want to watch into next week. Friday most likely will be very light volume as well, but we do have the non-farm payrolls report. Now, as of now, it looks to me like we've gotten weaker jobs numbers, so I would generally expect weaker on Friday as well. The question is how weak, and then how do the markets respond? Are big institutional investors still gone for the entire Friday and weekend, or will they be back to potentially bring order to the market, or will the retail investor continue to just float in this market and take it up on light volume? All right, a couple other things to go over here that I wanted to cover today. Number one, quickly looking at the Russell. Look at this underperformance on the IWM. This is the Russell 2000. So this is 2,000 stocks, let's be clear. All right, this is why it's a big deal, folks. 2,000 stocks. The NASDAQ 100 is 100 stocks. That's it. And we know that the big Mag 7 make up literally 50%. The S&P is 500 stocks. The Mag 7 make up about 33%, and these are 50%. And so what you can see here is that those two indexes are really controlled by a small handful, literally 7 companies they are controlled primarily by those stocks. When you look at the Russell and we look at what's going on here, you can clearly see that you had your high back in 2021 up here, and this is 2,000 companies, not including the Mag 7 are not in this group. Okay, so this is how the rest of the market has performed. There's your high in 2021. Look at where we currently are trading down here. Right? So again, not even close to new all-time highs, while the NASDAQ and S&P made new all-time highs today. So little things like that, as a technician, I pay attention. It doesn't mean the markets are going to turn down tomorrow or on Friday or next week, but it does signal a warning sign. It just tells you that the market breadth is very thin. And while it's working, it's fantastic, right? While things were going up in 2021 in the crypto markets, it was fantastic. But when the game is over, when the music stops, that's when things can get messy, and it likely will for the stock market when that happens. All right, so the Russell, again, you can see it was basically flat on the day, not much going on there. And again, that's important because the S&P and the NASDAQ were up. NVIDIA had a good day today. It caught a bid today. Again, a lighter volume in general. Yeah, it still did a lot of volume, but generally we can see that the channel here, which is a bearish flag pattern, bear flag meaning it favors the downside, even with this up move today, it's still that flag pattern right there, right? So you got that sideways consolidation. Now, if we start breaking up here, it would negate that, but you still have the reversal candle to kind of keep it in check. But again, I would like preferably to see that bear flag continue to hold and eventually a break to the downside. Now, Tesla was amazing, folks. Amazing move. I did a lot of number crunching on Tesla, and I found some major trend lines here. Take a look at this, guys. So Tesla today up another 7%. Remarkable move to the upside. Number one, it's a 3-bar surge. 1, 2, 3. Technically, if you look at 100 3-bar surges, which are big up candles in a row, one after the other, you will see that more often than not, it causes kind of exhaustion. You'll get a pullback. Having said that, it wouldn't shock me to see Tesla opening higher on Friday before selling off. But again, notice the 3 trend lines coordinating here. You have this low here, right through this low, right to that point right there. You have this high right here to here, which cuts right through this little high pivot, this high pivot, and this high pivot, and it also goes into that level. And then you have this low here, right to here, and right through here to this area as well. So there's a lot of resistance up around this 250 level. We'll see what Tesla does on Friday and into next week. But again, it does look like it's getting a little long in the tooth. Now, again, the narrative is spun, right? It used to be so bearish. When we were down here on Tesla, all you heard was bearishness, and obviously we were long in the service and made some good money on that. I even talked about it in this game plan and the trading the close. But the kicker now is it's kind of gone the opposite way. The narrative has been spun. Mainstream media is jumping on board. The analysts are jumping on board. Retail's jumping on board. And now it's all about, yeah, they beat deliveries. Yeah, they beat deliveries by 1%. Okay, good. It's good. At least they didn't miss, but it's good. But then they talked about their battery. Their battery segment was doing a little bit better. Okay, that's good too, but to me, that's more of a commodity. It's not something that's going to be high return, high margin. So again, it was good news, but does it warrant a 75% move from this low to this high, or even just in the last 7 days, a 33% move? That's the bigger question, and that's what investors are trying to figure out. All right, so again, that's your Tesla chart right there. Lastly, before we get into Bitcoin, just take a look at WBD. This is one of my favorite charts here right now. We did see that Paramount deal looking like it's going to go through. I just want to show you this. So we have a big trend line here, right here. All right, right through this low, and it literally comes to the current levels right there on WBD. And then if we zoom in, there's a secondary trend line here. I want to show you this because this is 2 trend lines converging. And if we zoom right in, you can see right here, right? Look at this. We have this low here, here, here. And so there's a lot of support right down here. And with the idea being that Paramount is getting bought out or merging, there might be some interest in the next player here, which is WBD. So it's just an idea, just a little tip for us going into the July 4th holiday weekend. All right, Bitcoin's next. Let's take a look. Bitcoin is breaking down here. You can see it looks like it will close below this little channel line. Here it pierced and it recovered and then chopped along it, got a little bounce up to resistance, rejected, and now it's below again. If it closes below, I'm going to watch for confirmation. If it confirms to the downside, and that means it's a confirmed breakdown, 56,500 right around here is your target zone. That happens to be the exact low right here. If that breaks, 50K is your next spot. So watch this closely. And again, take note that Bitcoin and the alts have really suffered, folks. You look at some of these alt charts, they are down 50, 60% from just where they were in March. So again, there might be opportunities. I was actually scouting a bunch of potential buying opportunities in smart money crypto at verifiedinvesting.com. So I'm keeping an eye on some of these, as there will be buying opportunities if we get a good flush. Gold today, it was kind of in a bearish wedge, might have just broken above it. I want to watch for confirmation as well. Basically, when we were in here, I had a negative bias on it. Now it's to a neutral bias. And this is what charts do, right? Doesn't matter what I think. My job is to translate what the chart is telling me, probability-wise. So now we've closed above. It's not all out bullish yet because you haven't confirmed. But what it does tell us is that at least you have to go to a neutral bias and say, okay, I need more information on the chart to get a better sense of what's going on. If we confirm, boom, you got to be bullish, and we're probably going to 2,500. If we don't and we come back in and we break this, then it's very, very bearish. So right now, my bias is neutral, which is no bias essentially on the charts. Next up, let's quickly touch on silver. Same thing happened on silver. It closed above two key levels. Remember, the jobs number on Friday could make a very volatile scenario for the metals because it will affect the dollar as well as the yields. Lastly, quickly touch on oil. Oil inched up just a little bit. Doesn't this look very familiar in terms of what we were just looking at on Tesla? 3 trend lines converging. We saw that reversal yesterday. Small bounce today. Again, July 4th, big driving day. Of course, they're going to try to keep up oil as much as they can going into that holiday. I would still expect a pullback, not only technically, but also once the July 4th holiday is over, you likely see a drawdown or a less pricey oil as the big players let it come down just a little bit. All right, that's enough for me today. Don't forget, guys, tomorrow the holiday is going to mean no trading the close. There's no game plan tomorrow. Doesn't mean I won't put out charts for members and write some articles on things that I see on Verified Investing. Don't forget, that homepage has everything you need. In fact, we're going to be adding insider buying and selling to the homepage. We're going to constantly give you guys more free information on that homepage to make it the best data center that an institution wishes they had, but we're giving it to you guys. And I want to say one thing. We're inventing, or we are creating, a new holiday. I hope I'm okay to say this, but I wanted to say that on July 15th, we're doing Investor Empowerment Day. As I've told you, my goal of Verified Investing is to make this the place where the small retail investor gets the same information as the institutional investors. Okay? And that's the goal here. And so it's Investor Empowerment Day. We're going to have a big day. I'm going to be doing the live trading room live in here, meaning you're going to see my account up on the screen. You're going to see my charts. I'm going to be making trades. It's going to be one of the biggest events ever. And we're trying to bring in a lot of big players in the industry to come and participate. The goal is to thank investors out there for supporting us, and also to give you guys that empowerment to be basically equal to institutional money. Everyone should have the same information. I think we can all agree with that. There should be no above here, oh, we're going to just dominate. No. Retail investors, you guys are going to be right in charge where you should be. So thank you so much for tuning in. As always, guys, thank you for your support here at Verified Investing. I'll talk to you tomorrow or next week. Awesome. Yeah, I thought it was